How do you think about it being a government bailout in terms of they let the equity and the debt holders fail, but they save the depositors? Is that still considered a bailout in your mind? And is that a positive or a negative thing? Should they have allowed people with more than $250,000 in those accounts to just go to zero?
Yes, they should have, because now here's what they've done. They bailed out the large depositors, but in doing that, they communicated to the public that all banks don't necessarily enjoy that protection, that it's a case-by-case situation. When a bank fails, that the Fed, the Treasury are going to evaluate the impact that bank failure might have on the economy or whatever, and then decide whether or not they want to cover the large deposits. And that created a huge problem for a lot of regional and community banks, because now you have the large depositors who are thinking, I've got my money at some small bank. And if this small bank fails, the FDIC coverage for my account, let's say I got $5 million at some small bank, I may not be covered. So I'm going to take my money out of that little bank. I'm going to send it to Bank of America. I'm going to send it to some big bank that's either too big to fail, or if it fails, I know they're going to cover everybody. So the government has actually accelerated the run out of smaller banks, because why would you put your money into one of those banks, given the fact that, all these banks are in trouble? So why take a chance? It's not like they're going to be able to pay you more interest. And if they did pay you more interest to offset the higher risk that you'll lose your money in a default, it's going to put those banks at a competitive disadvantage. So what the government has done is now they're moving towards even more consolidation in the bank industry, because they've created this problem. Now, of course, the solution to that problem is, okay, let's make this an explicit guarantee. We're going to guarantee everybody's account, no matter how large, no matter where it is. But then that's an even bigger problem, because where do you get the money to do that? The whole theory behind the deposit insurance was, look, we're just going to cover the little accounts. We're not going to cover the big accounts. And it's the big depositors that are going to keep the banks honest, right? Because if you put 5, 10 million, 20 million in a bank, you're going to do your research. You're going to do your homework, because you're not insured. And so we're going to count on the large depositors to police the banks. But the minute you say, hey, it doesn't matter, you're covered no matter what, then nobody polices the banks. Then it's just the government that polices the banks. And the government can't do a good job of it. Government doesn't do anything right. You need free market competition. That's the only regulation that works, because there you have the responsible parties held accountable for what they do wrong. The only real way out of it is to get away from insured accounts and to just phase it out. But of course, they're not going to do that either, because the banking system is insolvent. The whole thing would collapse without the government guarantees right now. It's on government life support. All of these banks would be technically insolvent today if they had to stand on their own 2 feet. It's only the government guarantees that are propping up the industry. But that is not how you want your banking industry to be. You don't want it to be a phony house of cards that is dependent on government backstops, because eventually those backstops are going to fail and the house of cards is going to collapse.